Welcome back, legends. I'm Dr. Cal, and let's get right into this quick market update video, and let's pick up where we left off. So this is the daily chart for the S&P 500. What do you notice, legends? The major update is that we have now crossed above this key resistance line that stopped pretty much every other rally in the past. So this is the correction resistance line. It rejected in the middle of the correction. Then we went back down all the way to 5,100 on the SPX. And we've bounced and rallied since then. This is a major trap level for many reasons that I will go into in this video, so please stick around. Slap that like button right in the face on your way in, and let's get right into the juicy bits. This is the S&P 500 1-hour chart. My upside target for the rally in my last video that I discussed was 547. We in fact ended up opening at that level, and then we continued to rally all the way to this prior resistance level. Look at that. Perfect. Very clean resistance level. So we exceeded the upper edge of this prior small range. We rallied all the way to the top of this prior resistance level, exceeding the 547 target. Double thumbs up for that. More money for us. Why the heck not? This is where a lot of traps will be laid. This is where you want to be tactical, where you want to put your greed to the side. It is time to be patient, take profit on your winners, and just wait for the market to form structure and give us the next setup. So why do I say it's now the time to double down? Well, look at the RSI, burned to a crisp, extremely overextended conditions. In fact, let me drop a horizontal line just to see when we were at this kind of overbought condition in the past. And what do you know? We've been there right here in early July. The market moved sideways for a few days. Then it continued to move higher in this bearish rising wedge structure. And then it ended up topping, breaking down, and pulling back. We go further back. Look at this, not quite as overextended, but we did end up forming this consolidation pattern for over a week, right? Market pulled back, rallied again, pulled back again, rallied again, pulled back again. So if you actually doubled down, you would have been stuck pretty much for a week when your money would have been better put to work somewhere else, someplace that I'll be discussing in the video. We go further back even more. Look at this again. If you would have gone along here, you would have been trapped for several days, more than a week, in fact, right? Market moved nowhere, sideways, and then pull back, and that was the buy. So overall market structure looks bullish. We do have a new uptrend. However, we are extremely overextended in the near term. RSI burned to a crisp. We are back at these very clean resistance levels, right? This was a prior supply area where big money was dumping positions, and you would expect big money to take profit, especially knowing that retail traders actually dumped the market when smart money was buying at the bottom, something that I discussed about a couple of weeks ago. So what happens next? Well, basically what we can expect next is a period of consolidation and pullback that could last several days as the RSI and overbought conditions begin to subside. Usually when the market gets this extremely overbought, sometimes we do get a blow-off move and then we get the pullback. Other times we just move sideways for a few days and then get the pullback. Either case, really, we wouldn't want to go long when the market is this overextended, especially after such a huge move from the August bottom. So this was the screenshot for the last video. Major changes. We broke above this resistance line. Usually this means that we likely rally to new highs or equal highs. This also usually means that this wave of the correction is ending. What it doesn't mean is that we just continue to move vertically higher every other day. Usually this means a consolidation period just like this one, or a bit of a pullback first and then we continue higher, especially as these overbought conditions begin to cool down. Now this is significant. 2 consecutive daily closes above this major correction resistance line does open the door for higher lows and higher highs, and at least a retest of the prior highs in July by the end of August. I continue to be bullish toward the end of August. My expectation is that the market will likely top sometime in late August and then come back down either to form a higher low or a lower low in September or October, as is seasonally the case in election years. Here's the election year seasonality from July all the way to the end of October. It tends to be flat. July to August, September, October tend to be bearish. So 2-week outlook still positive. Near term over the next several days, likely consolidation or pullback. That pullback should be bought as long as the market pulls back enough to alleviate this overbought condition. This is not the only indicator that I use. I also use the stochastic. I have a specific set of parameters and settings that I have for my stochastic that if you're part of the trading community, you can have access to. Now, this is the stochastic. It is extremely overbought. Usually in an uptrend, we want to buy after the stochastic enters over sold conditions, then crosses back up, kind of like these areas here. And usually we want to sell after the market enters extreme overbought conditions on the RSI. Obviously, I follow my own advice, so I did in fact sell my position. I had a long position in AMD, closed the trading account at $80,000 as of the close of Friday, August the 16th. This is an AMD June 2025 leap call position, 60 contracts that I bought and then ended up selling just a day later, locking about $10,000 in profit in 24 hours. I took this screenshot just before I sold, then I took the screenshot of the account just after I sold. So slightly over what the screenshot shows because I took it just before I sold, and price went even higher by the time that I sold. Here's my quarter to date P&L for the trading account. Here it is, July 1st to August 16th. So quarter to date in Q3 started with about $27,800 in the account, closed at the end of last week at $80,000, about 188% in 45 days. This is not a typical return for any trader, for any investor. I just want to make that very clear. This is not a typical return. This is not even what I usually target for my returns. Usually I look at doubling the account every quarter or so when the market is easy, and I look at doubling the account every year or so when the market is difficult. Market difficult meaning prolonged sideways moves or bear market like 2022, even though 2022 was one of my best years. Now, unfortunately, because I use TradeStation, they don't actually show me a graph of the account return. So I asked Julius AI to chart, and it broke Julius AI because I asked Julius to layer on the bottom here the S&P 500 return in the same period, and it just went crazy. So second attempt, here it is, it worked. So 45 days, July 1st to August 16th. This is the S&P 500. Basically broke even. The S&P was, I think, 0.2% higher in the same period, all the while the account pretty much almost tripled. Again, these are not typical returns because everybody has good months, bad months, good quarters, bad quarters, so on and so forth. If you're interested in finding out what the specific trades that I took to generate this return in the last 6 weeks, stick around because I'm going to go through those specific trades. Not many trades, by the way, just 3 to 4 main trades. That's it in the last 6 weeks. By the way, if you're interested in following my technical analysis in real time in the trading community, check out Money Time Machine on Patreon, the best way to support the channel and get access to all of my analysis in real time. The majority of the community members are annual members. I obviously want to reward my most loyal supporters. I think the best way to do that is to give you guys a nice discount, and that's why I have this kind of discount on the annual membership. Okay, so let's take a look at the S&P 500 futures chart. Look at this, significantly overbought, significantly overextended, just as extended as the S&P 500 chart. When we're at these overextended levels, it usually means we get somewhat of a pullback and consolidation, somewhat of a pullback, consolidation. Sometimes it's a deeper pullback, right? Like these examples. And sometimes it's just a shallow consolidation. On the S&P 500 futures, 5,440 is now support. It was resistance. It is now again support. These levels are clear demand levels. We had a double bottom here. And once we crossed this level, had this little dip here and rallied all the way to the top of this prior resistance level. Look at this very clean resistance level tagged multiple times in the past. Take a look at the NASDAQ futures chart. Same look here, rallied all the way to this prior pivot level resistance here, then broke above it, acted as support here, then again here, once we broke below it, acted as resistance. That's how pivot levels react when we're trading below them. They act as resistance. When we're trading above them, they act as support. So the futures are clearly overbought, overextended, right? Overbought, overextended, ready for a pullback slash consolidation, pullback or consolidation. Either is fine. When the NASDAQ 100 is outperforming the S&P 500, that is when this chart, the triple Qs, is outperforming the SPY. It is usually bullish. It indicates higher lows and higher highs for both the S&P and the NASDAQ. It also indicates that the NASDAQ 100 will usually push slightly higher than the S&P before it pulls back, even though it is extremely overextended. Quite often, the first overextended reading does not give us the top for the NASDAQ. Take a look at these examples. Extremely overextended, we still moved slightly higher before we pulled back. Extremely overextended, we still moved higher before we pulled back and then formed this consolidation pattern. Extremely overextended, we still moved slightly higher and then we pulled back. So for the NASDAQ 100, my expectation is that we could still get one push higher and then get that consolidation going. For the S&P 500, we could start that consolidation and pullback process as early as Tuesday next week. Take a look at the VIX. The VIX is now below this prior range that I discussed. It is now starting to form smaller and smaller candles. It is likely going to find a bounce somewhere in here at 14.5. This was a prior level of resistance. It is now a level of support until proven otherwise. Why does that matter? Well, because when the VIX pops back up, it indicates another volatility spike, usually coincides with the S&P 500 and NASDAQ 100 pulling back or at least consolidating with one strong red day. Let me give you a very clear example of that happening. Here's an example. This was a volatility spike where the market opened lower overnight. That caused a volatility spike, not a big one though, just a small gap down. This was a much larger volatility spike. You can see a very large red candle. If we get a candle that looks like that, usually in a bull pattern after we break above a key resistance level, that is usually a dip to buy. It is fairly common to get this slow melt up process. Look at these small candles. So very slow, slightly higher high here, slightly higher high, again, slightly higher high, and then we get the pullback, and that pullback gets bought immediately as long as it holds support. We're now in that process. If we take a look at where we are now, that's kind of what we're seeing already, right? Slightly higher high. We are already very close to resistance. Look for very slightly higher high, small candles, slow melt up, and then a boom pullback that happens over roughly a single trading session. If we pair that with the observation that the NASDAQ actually tends to continue to slightly move higher even after it hits over bot conditions for a couple of days and then give us the pullback, right? We have a few examples of that happening. Overbought here continues to melt up slightly higher and then we get the pullback. Again, pretty much the same look here, continues to melt up slowly higher and then we get that pullback. If I go further back, we can see that happening over and over again. Look at it here, overbought, continues to melt up slightly higher, then we get the pullback and that is bought, then we rally again and then we get a larger pullback, holds at major support, continues to move higher, again prints an overbought condition here, continues to move higher for a couple more days and then pulls back down. So the first overbought condition is not always the top. We usually melt up slowly higher, and then we get a volatility spike and a pullback. That is still my expectation going into next week. Let's take a look at the economic calendar for next week. We have a bunch of Fed speakers Monday and Tuesday. Fed Waller on Monday. Then Tuesday we have Bostic and Barr. And Wednesday we'll have the FOMC minutes. This could give us that volatility spike and pullback. So watch Wednesday. If we get a solid red day, that is likely a buy for a bounce Thursday. If we get the sell-off Tuesday before the FOMC minutes, then look for the bounce on the FOMC minutes. So usually the FOMC minutes will give us that volatility spike either a day prior, the same day, or the next day. That's usually how it happens. Then Friday we'll have the Fed Chair Powell speech. I want to keep this video short and sweet, so let's get right into those trades that I promised you earlier in the video. This is AMD. I ended up buying AMD on this breakout. I bought it right here, then sold the next day at the top. I also bought AMD here for this earnings trade and sold it here. So those were the two big AMD trades. My upside target for AMD is still slightly higher in the low 150s, back to these prior resistance levels here. Take a look at Microsoft, another name that I traded. I bought it here at this low, and I ended up selling this position somewhere in here when I saw that the market was beginning to reverse again. Now let's take a look at Pepsi. I bought Pepsi here, then I sold it on the breakout in here. I re-entered Pepsi again here, then I sold it again on the breakout here. This trade alone, even though I traded leaps, this trade alone in a single day netted about 20,000 in that single trade, just that trade. And then I switched to going along risk on sectors as the market was bottoming in here. Notice how Pepsi was rallying as the market was pulling back. This is classic rotation trading. Let me add the S&P so you guys can see what I'm talking about. This is how I was able to beat the market by such a big margin. The S&P 500 was topping in here, and I was already rotating defensively, buying Pepsi here, selling it on the breakout again, then buying Pepsi again on the pullback here, selling it again here as the market was moving down. That's when I began to rotate into other trades like AMD and Nvidia in this short squeeze rally. Let's close this video out by talking about some of the most important indicators. Fear and greed. We are still in fear territory 35. The fear and greed index still has more room to keep moving higher and go into neutral territory sometime in the next couple of weeks as the market continues to rally into the end of August. That's my expectation. If we take a look at the bullish percent index, I talked about this chart in my last couple videos. We had a lower low here and a higher low on the RSI for the BP SPX, and that helped us call the bottom as the market was bottoming in here in that final capitulation move lower. So again, to summarize really quickly, near term overbought to the extreme, overextended significantly. S&P 500 very likely now begins a consolidation process that could last a week. Look for a pullback in reaction to the FOMC minutes. That means probably sometime by Wednesday, Thursday, that pullback is likely a buy unless something major changes. If we take a look at the NASDAQ 100, usually the first overbought condition means we move slightly higher first and then get the pullback. Usually the first, again, overbought condition means we move slightly higher and then we get that pullback. That is still my expectation as stocks like AMD realize their targets. That means we still have some more upside to go, but we're now entering that consolidation phase. So look for something that looks kind of like this for most stocks in the NASDAQ and S&P. Rally early in the week, then pull back on FOMC, and then potentially find a bottom at the end of the week, and then give us that final rally to end the month in the week after. This is also supported by charts like XLY relative to XLP, putting in a buy signal as of the close of Friday. And my expectation is still that this ratio chart rallies all the way to this prior level of support that is now likely to act as resistance. XLY relative to XLP looks at the risk appetite in the market. That means buying tech and consumer discretionary relative to staples and defensives. Exactly the opposite of what was happening with Pepsi. Remember, as Pepsi was rallying, the market was correcting. We're now getting the opposite move, right? Money's flowing out of defensives and into a risk on sectors, stuff like big cap tech, Nvidia, AMD, semiconductors, etc. We're still not done with that move. We still have some more upside to go. That means that offensive rotation, that risk on rotation, likely to continue even as we begin to consolidate in the overall market next week. If you enjoyed this video, slap the like button right in the face on your way out. If you watched till the end and you did not enjoy it, I still thank you for your time and attention. That's all I have for you today, legends. Thank you so much for watching, and I'll catch you in the next one. Bye-bye.